all around the world. This is FXPassion broadcasting you live on YouTube, and happy Friday everybody. This is Forex trading course 101. Remember the three pillars, and yes, today we are going to talk about the topic of yesterday, right? What is working, what doesn't work. Okay, the three pillars. We need to know and understand, and we need to build a strategy or a system. Then we need to understand and to have a risk management in place and obey risk management rules. And the big one, we need to understand how psychology works, right? In trading. Okay, everybody, remember 90% of traders lose money in the Forex market worldwide. Also remember, the webinars are not investment or trading advice, they are for educational purposes only. And don't trade with... Hello Roger, you are logged in as Roger. First, only don't trade with money you cannot afford to lose, everybody. Hello Miguel, hello Roger. And everybody, I have a 20 seconds delay on the chat, so when you say something, if I don't answer in the first second or two, is because I have a 20 seconds delay. Okay, if this is your first time, we are in the beginner module. We finished with the basic, we are in the beginner module. So if this is your first time watching these webinars live, and if you don't quite understand how it's done, what is structure, what are the relevant highs and lows, what are the trends inside the market structure, please go on the Stohastic YouTube page and watch all the webinars starting from number 1. Okay, that being said, everybody, today's topic is how to trade resistance in an uptrend. Okay, but before this, we need to... I want to finish this. This is it's Friday, right? So we can start a little bit of philosophical debate, right? Today we are going to close the debate what works, what doesn't work, about backtesting. Is the market white noise? Does the market have memory? And this kind of things, okay? So, question number 1. Who in here thinks that 100% automatic systems or strategies exist? Number 1. What do you think, everybody? Do 100% automatic systems or strategies, do they exist out there in the real world? Do they exist? Oh, I have a friend that runs a robot, right? Do they exist? Remember, the question is do 100%. Hello Ellington, how are you? Do 100% automatic, must be 100% automatic. Okay, and everybody, question number 7. Okay, we are going to talk, and in the end make your educated decision on what works and what doesn't work. Eddington says of course they do. Okay, question number 2. Victor says nope. Okay, so we have 2. Miguel says no. Okay, for the one who says, well, 100% automatic systems exist, number 2, do they work? Do they work, robots, expert advisors, whatever, strategies? Miko says, no, 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 no. Which one? No, 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 no. Question number 1 or question number 2? Do they work, everybody? What do you think? There is no right or wrong. In the end, you can make your educated decision on what works. But we are going to talk about common sense, just to close the topic, right? Because some of you are asking questions, sending an email, but Passion, what about this, what about that? And I said to you, this doesn't work. What about that? Doesn't work. Yes, but it doesn't work. Okay. No, but my friend, it doesn't work. Eddington says number 2, they exist but they don't work. Okay, so all the mathematicians and engineers here okay, and programmers. Some of you are sending me emails, oh, I want to program an automatic system. Do they exist 100%? Yes, they do. Do they work? Yes, they do. Number 3, do they work most of the time? Any robots work poor. Mikkel, number 1, they don't work. Okay? Now, some of you are thinking that automatic systems 100% they work, and they work most of the time. There are some of you in here who are quiet, right? But you think this, right? You think, they exist and they work. Number 3, they work most of the time. Okay? So if automatic systems 100% and strategies, if they do exist and if they do work most of the time, what about investment banks and investment funds? Do you think investment banks have this kind of robots and investment funds have this kind of 100% automatic systems and strategies? What do you think? They need to be reprogrammed very often. Okay? So what do you think? Let's take Ducascopy. Do you think it's an investment bank? Do you think they have automatic system and strategies? What do you think? They have, they don't have. Investment banks, investment funds, they have 1,000 engineers, right? 1,000 programmers, they have thousands of them. The big ones, right? The JP Morgan Chase investment fund or whatever. I don't know the names. It's just an example. Okay? And guess what, everybody? Okay? I'm not going to say, oh, they have and they don't work, but when you invest your money in an investment bank or in an investment fund, what they have in common? When you're going to sign a contract, oh, I'm going to deposit $1,000 in this investment fund or in that investment fund or in this asset management group or this asset management investment bank, what they have in the very small print, who knows in here? When you invest in some company, investment fund or bank, and you are going to look at past results, what are they telling you? Big one habit we do not. Better like this, Mikkel, believe me. Did anybody invest in any bank or investment fund? What they tell you? Who knows? The sentence starts with past performance is, no guarantee, yes, but one more specific. And it's connected to the question, is the market white noise? Can you engineer a 100% automatic system or strategy? And if you can engineer this, is going to work most of the time? Is it going? That's it, Eddington. Okay, so if this is you, okay, everybody, and you think that 100% automatic system and strategies exist, and if you think that they work most of the time, why do you think the investment banks and investment funds tell you past results are no indication of future performance? Why do you think? Of course, this can turn into a philosophical debate, right? Oh, this is because nothing is guaranteed, but you have back tested your system. It's 100% automatic. So if the market does this thing 1,000 times or 10,000 times or 1 million times, it's supposed or it will do the same thing, right? There is no right or wrong. I'm just stimulating you to think, everybody. Is the market white noise? This is a vocabulary of mathematicians, engineers. White noise is something that you cannot predict most of the time. You cannot incorporate, you cannot encapsulate most of the things. They don't work. Annie says, I have programmed automatic trade systems. They work when there are long trends with little spikes or change trend breaks. Great. Do they work systems most of the time? Right? And Annie's giving you the answer. The market is always changing, always changing, always changing. Okay? Now, on the other side, oh, Pesh, so there is back testing a bad thing? Of course not. Question number 5. If there are 100% automatic systems and strategies, and they don't work most of the time, meaning, as Annie said, well, when the market changes, it's not working anymore. Okay? And if the big investment banks that have thousands of engineers and traders and programmers, they are telling you that past results are no indication of future performance, right? You have, if you check on the internet, everybody, you are going to find investment funds that were profitable for 5 straight years, and they lost almost everything in the 6th year. Why do you think is that? They are averaging 15, 20, 30% per year, and the 6th year -5. Why do you think is that? Okay, now again, this we can debate, oh, because of the weather and because the sun was not positioned in the right place, you know. So number 5, is backtesting a bad thing? Absolutely not, everybody. But I'm telling you, for the one who are sending me emails and I'm telling you doesn't work, doesn't work, doesn't work, if you are going to backtest a system and or a strategy, don't bet that the future performance is going to be the same. Miguel says, I have done lots of backtesting and it's not a bad thing. Yet you can develop your strategy and system, but demo is definitely better. Thank you, Miguel. So yes, sir, backtesting is a good thing, but just don't expect, everybody, the future performance to be the same as the past result. Okay? Even if you are a stubborn person, as I am, right? Ask yourself, well, if big investment banks cannot indicate future performance, right? Of course, there may be some genius, right? Exception to the rule. Okay. Number 6, does standard deviation work in the Forex market? You know, some of you are sending me emails, what works most of the time and what doesn't work most of the time. And sometimes I give you an answer, but sometimes I don't have an answer. Oh, how come that you don't have an answer? Because there are strategies and market behaviors where standard deviation doesn't work. Okay? Now, I'm not saying yes and no, I'm just stimulating everybody to think. Okay? When you're going to answer to yourself 1, 2, 3, extremely important, number 4, 5 and 6, so you can make your educated decision. Why we have this conversation? I received one email, oh, Passion, so I don't need to backtest. No, I'm not saying this, everybody. Okay? If you are a programmer, if you are a mathematician, if you are an engineer, do what you like. I'm not saying this is a bad thing. No, sir. I'm just saying, as a trader, don't bet all your hopes and wishes on the future performance of what you backtested. Okay? Any question before we close this topic, everybody? Any questions? You can make a question to somebody else. Eddington can make question to Mikhail. Mikhail, if you have a question for Annie, do you have question for Miguel? Or if you have any question for me, please type in the chat. If not, we are closing this topic and we are moving on. Remember, I have a 20 seconds delay on the chat. And if you don't see some questions, everybody that is on YouTube, I have one more platform that I'm streaming on. Some students are on the other platform, okay? No questions, okay, no questions, okay. Questions. So, robots don't work. Yes, sir. They don't work most of the time, okay? When you buy a robot or you pay your money to a signal provider or an expert advisor, they don't work most of the time. My opinion, okay, I don't know everybody all over the world, but I'm thinking critically, if there were a robot or an expert advisor, okay, then everybody would be a zillionaire by now. Okay, if you ask me, Passion, what do you think? I know in my experience, and I think robots and expert advisors that are 100% automatic, and I have friends in investment banks and investment funds, and I know they don't work most of the time. They do work though, but not most of the time, everybody, because the market is always changing, always changing. Okay, no questions so far, so let's start talking about today's topic. How to trade resistance in an uptrend. Okay, everybody, yesterday we learned a few new things that were against what you have learned so far, right? What we learned yesterday, it was how to trade support in a downtrend, right? And the new thing we learned is that the same way you can have a counter trend line on the retracement, the same way you can have a counter trend line on the extension. This was a new thing from yesterday. Okay, today we are going to do the same, just in the opposite direction, with a few more new things to learn. So if this is the uptrend, right? This is the uptrend, okay? How to trade resistance. So this is the uptrend, this is the uptrend line, and we started to talk yesterday. We explained to you that when we are talking about resistance and trends and everything, we said that we are talking about for what happened in the previous trends, right? Okay, so similarly to yesterday, today again, what we are going to do? Well, we are going to draw a counter trend line on the extension. Let's color code this in black. Okay, counter trend line on the extension. And for the counter trend traders, this is going to be the opportunity for you to enter a counter trend trade. Okay, now if you understood yesterday, today is going to be easy. It's the same thing, just reversed. Okay, where the extension most likely is going to end, where and when we are going to find past resistance. Okay, let's color code this in blue and something like this, okay? So when the market is going to react, for you to have a higher degree of success, and we clarify to you that this kind of trades are risky, right? but when the market is going to end the extension, most likely is going to end the extension when it's going to hit some kind of past resistance. Okay, why I don't put a counter trend line in here? The first wave, it's not confirmed, and most likely you are not going to see it. Okay, the first wave is not confirmed, and most likely you are not going to see it. So, and also here we learned about the rules of how can you confirm a trend. So when you see the first one, this is a 75 market broke structure, right? The market broke structure, but you are in a 75% or up structure or uptrend. Okay, so this is why we are not entering here. But when you have finally a confirmed structure or a confirmed uptrend, if you want, and we are going to check the live chart in just a second, then you can go find your trading opportunities, right? Any questions so far? One more thing that we learned is that yesterday sometimes the high and the low are going to connect, right, like in here. Sometimes one is going to break the other, like in here. This high, this support, this high entered, broke the level of past resistance. It's going to go, it's not going to connect this beautifully. It's going to break, one is going to break inside the other. And sometimes the market is going to react without touching or connecting, right? Like in here, this high, or in here, the market reacted, is going to push lower, broke the counter trend line on the extension, but it didn't quite touch the past resistance, or past resistance is far away. Okay, any questions so far about the theory? We are going to check the live market right now. And again, we are upgrading your knowledge, everybody. If you have two trades, if you have USD JPY and you have an opportunity to go together with the trend and with the structure and with the extension, and you have Euro CAD giving you the opportunity to enter a counter 10 trade, enter the USD JPY trade. All the rules still apply. We are upgrading your knowledge, everybody. How many candles after the 75% angle do you have to wait before enter the market? It's not the candles, any are the highs and the lows. Not the candles. Highs and lows, relevant highs and lows. 25% is the first low, 50%, 25 plus 25, 50. Second low, higher low, 75%. Okay? So, are not the candles, are the highs and the lows, 25%. Great question, Annie. 25%, 25%, 25%, 25%, clone, one more. So when you have minimum two highs and two lows, and the second high and the second low is a higher high, and a higher low, you have a confirmed trend, right? But when the trend or structure, when the first change is going to happen, is going to be like this. This is where the uptrend or the up structure is changing to a downtrend or a down structure. So when this happens, it's just an example. It happens on all currency pair, on all time frames, right? You have a 25% downtrend, not confirmed yet, high risk, right? Tell me what do I need in here to have a 100% confirmation? And remember everybody, if you're a beginner trader, 100% confirmed trend, it's not the same as guaranteed trend. 100% downtrend, it doesn't mean that you are going to have a 100% trade. They don't exist. And what do I need? What does the black line need in order to make 100% confirmed downtrend? Mika, Miguel, Eddington, if you want you can help any. What do we need? I have a 20 seconds delay on the chat. Another extension, yes, correct, any? Another relevant lower low. If the red line is structure, you need structure. If the red line is a short-term trend inside structure, you must have another short-term trend inside structure. Okay? Ask questions, everybody. Eurocad daily chart. How to trade resistance in an uptrend. Okay. Let me see. Let's find a good example. Uptrend. Okay, there you go. Uptrend in here. So, and why the daily chart? Because I don't know if George is here today, but George said correctly, right? In all fairness, say, well, Passion, but man, should we stay out for 5 days? And I said, yes, sir. But shouldn't we make money? I said, no, sir. Okay, but this was in the beginning. The basic module is over now. We are in the beginner module. And we start to talk about counter trend trading. Right? So, as always, we don't have the crystal ball, right? We are here. Okay? Now, question number one. Do we agree, everybody, that the market broke our downtrend line? Yes, some of you send me, Passion, go slowly. You are going too fast. Yes, sir. Let's go step by step. Question number one. This is what you see on the weekly, on the daily, maybe 4 hours, right? You don't want to wait for 2 months. You want to trade, which is okay. Question number one, did the market break our downtrend line? You can say yes, you can say no, you can say I don't know. Yes, okay. Question number two, where does the uptrend start, right? Where does the uptrend start? And I'm going to give you help asking you another question. Do trends form from past trends? Meaning, does the uptrend form from the downtrend? The Forex market is 24 hours. It does not stop. It stops only for half a day and a half. Do downtrends form from uptrends, or do uptrends form from downtrends? Yes, they do, right? So before I start searching for or a trend or structure, whatever, I need to see where is the starting point of the uptrend, right? And if the uptrend forms from a downtrend, well, we were in a down structure and downtrend. This is the point, right? This is the lowest point So the answer would be uptrend start from the lowest point of the downtrend. Yes, Miguel, absolutely. Trends come previous trends. The low under your circle, yes. Okay, great. Now we have a trend line break. Now what about trends and structure, right? So I'm going to delete the circle. We clarified, we agree on this. I'm going to delete the circle. Now we learned about the relevant highs and lows. So relevant low. Passion, how do you know? We learned this, everybody, in the past month. Okay. Now this is structure. Do I have minimum 2 highs and 2 lows where the second high and the second low are a higher high and a higher low? Do I have this? You can say yes, you can say no. Right? Let me see. Okay, we have some more space. We are here right now, yes? Do we have 2 highs and 2 lows where the second high and the second low is a higher high and a higher low? Yes, we have. Okay. So it's 100%, right? Okay, I'm going to delete this. I'm going to delete this. Delete, 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 delete. So we are here right now. And I'm going to draw the first long-term uptrend line. I need to zoom in. The first long-term like this, medium term, something like that, and okay, now I can see spatially we are here that the market is in the process, right? It's going to make short term higher highs, higher lows, higher highs, higher lows, lower lows, lower highs, lower lows, lower highs, and back, higher highs, higher lows, higher highs, higher lows. Right? So what do we have here? We have here the market wave, extension, retracement, extension. Do we agree on that? Like this. So we have the market wave, right? Now, how to trade resistance in an uptrend? Well, if we compress the chart, right, I don't know, as a trader, I don't know how far the market is going to go, until where the market is going to go. I don't have any idea, right? What I know is that I can trade extensions, and if I want to do so, I can trade retracements, right? So in order to trade retracements, I'm going to use resistance in an uptrend. Okay, so where is resistance? Well, this is resistance in here. This is one resistance. Okay, and we have many resistance from the past, from the previous trend, right? Resistance is where and when the tennis ball is going to hit the wall, like resistance here, right? Resistance here. We have many resistance, but I'm going to delete this, everybody. Delete, delete. And I can scroll back in time to see, do I have more resistance? Not quite. Okay. So this is those are my resistance levels, and we are here right now. Okay. Now, as what you can see, everybody, is that, remember the market wave. extension, retracement, extension, and I can draw a counter trend line on the extension, right? And this is one indication that the market is going to reverse, but the indication, the other indication is this counter trend line break on the extension is happening where is past resistance. I need to compress more the chart. Okay, can you see this, everybody? The market is reacting. It happened a counter trend line break where past resistance is, and this could be an entry if you want to short the market. And again, everybody, if you are a beginner trader, the counter trend trades are riskier than the other trades. Okay, we are teaching you this just for you to know. You can be a counter trend trader, no problem. Just be conscious that because retracement must be shorter or smaller, if you want to use another word, than the extension, those kind of trading and trades are riskier. Okay, if you're a beginner trader, you need to choose between two trades: to trade an extension or to trade the retracement. Trade an extension. Okay, now let's see how smart you are, everybody. You have two trades: extension trade with risk reward 1, 2. Let's see how smart you are, everybody. You have one trade, it's an extension trade with risk reward 1 to 2, and you have a retracement trade, retracement trade with risk reward 1 to 5. I told you yesterday how you should think. Tell me which one. Let's make a poll. There is no right or wrong. Which one are you going to choose, everybody? It's Monday, you are trading and you have two opportunities to enter an extension trade with risk reward 1 to 2, and you have a retracement trade where you are going to risk $1 to get 5, or 10 to get 50, or 1,000 to earn 5,000. Which one are you going to take, everybody? The extension trade or the retracement trade? Let's see how smart you are, everybody. Don't be shy. There is no right or wrong. I'm not going to tell you, oh no, you were wrong, you know. No. But this is going to show you how you think. Okay, we learned about probabilities in the market. Okay, no problem. You can say, oh, I'm a more aggressive trader, I'm going to take a retracement trade. No problem. Sure. Eddington says extensions are longer trends, so you better trade is the extension, plus it has higher probability. And he says makes the difference whether it was short or long time ago. Victor says extension, any extension. Come on, nobody has the guts to do a retracement trade? No courage? Oh man, no courage here, man. The same question, but now with numbers. Okay. There is no right or wrong. What we know, everybody, is that extension trades work 8 times 9 of 10. Okay, 9 times out of 10 extension trades have a higher degree, a higher chance of success. Does this mean that the retracement trade do not work? No, they do. But especially if you're a beginner trader, if you need to choose one between the two, choose the extension trade. Okay, you are going to have a better chance of success. Okay, everybody, let's go back. Let's see what is going to happen. So it happened a short retracement, and let's see what the market is going to do. Let's see. The market is moving, still sideways moving. Okay, so we had an extension until here, right? And again, this second, right, the second counter trend line on the extension, if you want, like this, not the perfect one, but still, okay, reacted most likely at the same past resistance. Okay, so you could trade this one on the smaller time frame, you could trade this one on the smaller time frame if you want. It's always the same, right? Counter trend line break on the extension. Passion, how do you know that this is the end of the extension? Always the same concept, everybody. This is the end. Do we agree that this is the end of the retracement? The circle. How do you know? Well, we learned this. The market is making higher highs, higher lows. It's always the same, everybody. Extensions, uptrend, retracements, downtrend, extensions, uptrend. In an up structure, in a down structure, extensions, retracements, uptrend, extensions, downtrend. We learned about this, right? So in here, this was the retracement, and the market pushed higher, made a higher high. This is showing us that the retracement is over. Watch the webinars over and over and over again, everybody. If you don't understand today and yesterday, go back on webinar number 1. I don't want no problem, you know, no problem. I'm telling you, no problem. So let me see, what do we have here? Okay, the market is moving and we want to see extensions, right? Okay, going down, we want to see extensions. So the market is moving down, moving finally, right? Let's see if we're going to make a higher high. Still moving. Let's compress the chart, and finally we have a higher high. Okay, so we are going to do what? We learned about this, right? We're going to adjust our extension and we are going to adjust our retracement, extension. So this is going to be the new structure, right? The new market wave: extension, retracement, extension. And again, we're going to draw a counter trend line on the extension. Okay, now this, let's clone this reaction in here. Let's see first if we have a counter trend line break on the extension. Not yet. Finally, yes, we have a counter trend line. Okay, so let's check. We're going to go back in time. Let's see if the market reacted to some kind of past resistance. So we are checking the upper line, right? There is no low, not a low, not a low. Back in time. Well, maybe the market reacted to this low. Back in time if you want. Let's compress the chart. Let's compress the chart. Okay, there you go. Why did the market react to this level? Well, look here everybody, this is past resistance. Okay, so if you why we have a lot of, we have many indicators, right, to prove what is going to happen, why is going to happen. So this is an indication why the counter trend line break on the hour extension happened in this place, because technically speaking, of course, because of this past resistance. Okay, so to spatially see, and we learned in the first webinar, right, what is resistance, what is support, and I gave you everybody homework. I gave you the homework. It's about find pivot points on the monthly chart, right? Okay, now homework, let me check the time, 10 more minutes. Okay, homework until tomorrow. Find support and resistance levels on the monthly time frame, MTF monthly time frame, for your currencies of interest. Okay, find support and resistance levels on the monthly time frame. MTF stands for monthly time frame, for your currencies of interest. So like example, one of the easy one, NZD CAD, it's one of the easy ones, right? Not pivot points, you should have the pivot points already, everybody. This was the homework, the pivot points you should have already. But try to find, right? Try to find support levels on your chart. Let's color code like this. Just an example. It's your homework, everybody. Resistance. Okay, find on the monthly chart, find support levels and resistance levels. Okay, why is that? Okay, why is that? Great question. Why is that? Why do you need to have this, everybody? When you are going to, let's make it like this, when you are going to trade the 2-hour chart, it's just an example, could be the 15 minutes, the 5 minutes, whatever, and you are going to find structure, the red line, and you are going to find the short-term trend, right? Okay, and this could be the 1-hour chart, the 2-hour chart, the 4-hour chart. When you are going to approach resistance on the monthly, you need to be careful, or you are going to short the market, like we are shorting AUDJPY, and you are going to have the, again, you are going to identify the red structure, and you are going to identify the short-term downtrend, and you are going to enter a high probability trade, right, with the counter trend line and everything. Well, when you are going up, where you are going to see a pivot point or support in a downtrend, this was lesson from yesterday, be careful there, because something is going to happen. Passion, what is going to happen? Let's go step by step, everybody. Okay, need to be careful. What is going to happen if you are going to enter in here, and as a good FXPassion student, you are going to put your stop loss above this structure high, right? And you know that you shouldn't risk more than you are making. When this happens, unfortunately, most likely, and I don't have the crystal ball, most likely you are going to risk more than you are making, right? And most likely, and I don't have the crystal ball, this is going to happen. You are going to lose, or the market is going to eat your profits. Entries are just one tiny part of trading, everybody. Countless traders are very good at entries. This is when you can see on my FX book or other platforms that are measuring they have a 95% accuracy on the entries, but they are not making any money. Why? Because the entry was okay, the entry was good, but they are not good. They don't know how to manage the trade. They don't know how to spatially see the big picture. You know, you enter and the first 5 minutes or the first 2 hours you are making pips, but the third and fourth hour you are or break even or you are losing pips. Right, everybody? Can you hear me? Right? Don't don't tell me no. I've been there, I've done this. Okay, this is why you should have resistance and pivot points and support levels on these smaller time frames, right? You need to identify them on the monthly chart, and you need to put them on the 2-hour chart. Okay, one more example. We have 3 more minutes. Okay, for the beginner trader, NZD CAD monthly chart, structure is down. We are in an extension leg. This extension leg, it's approaching a pivot point. Okay, where is it? There you go. The extension leg is approaching a pivot point. Okay, there you go. If you are short here, you are going to have problems. Passion, but you said that we need to short. Yes. Long term, the bias is down because the monthly chart and because of the contracts of the governments. However, the market is supposed to react. Passion, but you said that the market doesn't have memory, it's white noise. Yes, that's true, but maybe it's better to be safe than sorry. Okay, as yesterday I tried to explain to George, it's not the same thing when you are closing a trade because of the past and you are not entering a trade because of the past. Those are 2 different things, everybody. Okay, so I don't know what is going to happen, but I know I'm not shorting in here. Okay, and because I believe the market is white noise, I cannot predict the future most of the time. I'm not shorting in here, but also I'm not going long in here, at least not yet, because if I could predict the future at this point, say, oh, I'm going to take a long position in here, I would be a zillionaire already, everybody, and you too. Okay, everybody, happy Friday, go relax. Sunday, Saturday, we are going to be back tomorrow on Monday. Do the homework, find your support and resistance levels on the monthly time frame for your currencies of interest. That being said, stay strong and go relax. This is FXPassion signing off.